let's discuss the issue of VAT return, the submission of zero vis-a-vis declaring the money that you charge the clients. I need to talk about the risk. I need to talk about what you need to know in terms as an account, as a business owner. Let's say you charge your clients 100,000. You charge that client's VAT of 15,000. Come month end, VAT time, you tell your accountant, he says no, declare zero. And the clients that you charged 100,000, that clients have spent money, meaning they've also paid you the VAT. So in their VAT return, they are going to also claim that 15,000 from SARS. So SARS have a mechanism or a control which they are able to verify that clients of yours who's claiming VAT, did you who actually receive that VAT amounts through that invoice also declare on your side? Because in the past people used to manufacture expenditure invoices and claim VAT, and obviously at that time, because of the controls that SARS had, they were not able to tell whether this is true or not, because when they phone the supplier will always confirm, whereas the supplier's number is actually been manufactured, because this would have been a syndicate. Therefore, now SARS, what they do, they instead of now calling the supplier, they say, okay, this VAT, it was charged by so-and-so company, and let's check his return, because he's supposed to also have declared the 100,000 sales on his VAT return. Then they'll look at your return, they realize that you've declared zero. But this one who's declaring for the input VAT is now declaring money. Then it raises a risk on your business as well. So it also raises they will flag your business as one of those that they need to be audited. They might not audit you right away, but it might be flagged, put it in a basket of all these risky business that have been identified as risky. And that is the biggest risk that you come across if your company is currently making money but you are not declaring VAT at all, because they are able to check. And also, with terms of the new law that came into effect, I'm not sure of the year, SARS have access to companies' bank statements. Unlike before, they were not able to. They have to ask you to submit bank statement. But now, they are able to just access the bank statement right away. And meaning they can be able to verify your company in terms of the money that was made and things like that. Thirdly, if you are doing work with the government, in most cases, when they want to pay you, they will normally want to verify your tax pin. So how the SARS system is designed, when they are verifying your tax pin, it requires them to put in your payment details, your contractors' references, or your clients. If you are doing work with the Department of Transport, they will need to put that tender descriptions, how much they are about to pay you, or if it's appointments, how much the contracts are going to be. So basically, when they are verifying, they are also feeding that SARS system with information. So the moment they verify your tax pin, if you are compliant before they pay you, that's why in most cases before they pay you, they'll call you, says we can't pay you because we need to verify your tax compliance first. So that process of them verifying tax compliance, they are feeding the system with the information of how much they want to pay you. So in principle, SARS have the information that your company at some point they were verifying, they were supposed to pay you R1 million. But then when they look at your returns for 3-5 months, you are still submitting zero. But there was a verification of that. It says that you were about to pay R1 million. So that is another risk that SARS are able to detect. It's just that you might have been running away from these submissions of VAT, declaring zero for some times. But it doesn't imply that you are safe or they can't see you. It's just that SARS, they don't have capacity to look at everyone. But should they do, then it's a problem. And you know that penalties for such is 200% penalties plus the 10% for all the times when you were non-compliant. That's it for today. Next we'll be discussing, follow our social pages. We will also be discussing the risk about the income tax and the issue of the payroll, the pay slip, the deduction of payee and UIF and COIDA. How is it critical, how is it important, and how to do it, and what happens if you're not doing it in terms of the compliance purposes. And the issue of the CIDB requirements for those that are in construction or electrical or in the engineering field. We will also be discussing it in the next chapters. And the issue of the licensing for those that are in the energy, like your wholesaler energies, your fuel, how to start a garage, how to register to supply the energy, to supply for bulk energy. So those are the topics we'll be discussing in the next episode, so that you made aware in terms of what is it that's required, what are the opportunities. Thank you.